We're hot on mic. Well, hello and welcome, everybody. I see a couple good faces on here, right? So let me know if you guys can hear me loud and clear, just so I know that everything's working correctly. Jeffrey, thank you. The shine, I appreciate the thumbs up and the light that you're bringing to all of us. That's my bald joke of the day, right? If Ron Eccles was here, he would definitely be all for it too. Glad I can make you smile, right? I don't know that Virginia Tech is a real college. No, I'm just kidding, James. I'm just kidding. Kidding. Well, good. Glad you guys are all on. We're going to get started here in just a moment. We're just kind of letting the Zoom call registration kind of like everybody load in and different things. I am here with my great friend Jerry Ellenberg, and I'm gonna do a proper introduction of Jerry in just a minute. But Jerry, if you want to say hi to everybody, feel free to.
Yeah, thanks, Dutch, for having me here, and hello to all of our shareholders who signed up for this, and folks that we haven't met yet that are with RAD Diversified. We're very honored to be invited to this, and I'm gonna run through quickly our two programs, but take some special time to introduce the GolfSuites and ERC communities investors to Dutch and Amy's program here at RAD Diversified. Tremendous asset diversification. Uh, this is really the first and perhaps only collaboration that my company will do. We've really taken to this group, and so I'll elaborate on that as we move on tonight.
One of the things I realized in our camera is that my iced tea looks like it's alcohol in the camera, so it is iced tea.
It's Jim Beam, folks. He's kidding you.
I mean, Jerry and I could have it. I would share a drink with Jerry, right? For sure. But it's interesting as we started promoting this week. Actually, Jerry, I got calls and text messages from probably 6 or 7 of our own investors that have actually already invested
Right.
with either ERC communities or Golf Suites. And so, as a proper introduction to Jerry, as before he gets started and stuff, right? Let's be clear about a couple disclosures, right? Number one is Jerry and I in no way have compensated each other, right, for being a part of this sharing of this our offering, sharing of our investment vehicles, sharing of the investments we're making for, right? Jerry and Golf Suites and ERC communities is something I have come across and was recommended to me by some of my own investors, by some of our team and stuff who had came across Jerry's offering, and so we started to dive into it and we started to look into it and say, hey, is this something we would invest in ourselves? Is this something that our investors may be interested in, and those kind of things? And what I really kind of found out as I started diving into it, I'm in this interesting industry, crowdfunding industry, the Reg A industry, and Jerry's kind of one of the godfathers of the industry in the sense that he's run what are you at 6 Regulation A offerings now, or 7?
Sixth and seventh, yeah.
6th and 7th Regulation A offerings. He has been raising capital most of his adult life, and when you think about learning from someone who's had over 2,600 rental units, who's had an experience in different arenas and different areas of business and real estate and achieved success along the ways and kept a strong reputation, which none of that is easy to do, right, in today's America, right? To keep investors happy, I always tease with my inner circle. I say my inner circle members have been with me since 2015. I've been married to my wife for 17 years, and it's not easy to make either one of them happy every single day of our lives, right? We have to work at it and work diligently and hard at it. And so I say, Jerry, with what he's built with his communities and what he's built with his reputation is unparalleled. So with that said, I'm going to hand it off to you. We're going to have ERC communities and Golf Suites. We're going to have them share first, and then what we do at the RAD, we're going to go ahead and we'll share after. But I'm excited for you to be able to share with everybody, Jerry, because my people have been fired up for this.
No, that's great, and thanks again, Dutch, for having me. Folks, I'm going to roll through my two companies pretty quickly, pretty efficiently. Got to use my clicker here. I do chair two distinct crowdfunding companies, Golf Suites Incorporated and ERC Communities Incorporated. The upper level ownership and management of the two companies is pretty much the same, but it is two distinct companies. One is for the lack of a better term, is a Top Golf clone. Most of you on this webinar tonight probably know about Top Golf. It's golf driving range entertainment, coupled with very classy food and beverage offerings. Businesses probably generate approximately 2/3 to 70% of their of their revenue on food and beverage, and the balance on renting out the golf bays where they can hit golf balls and with computer simulation and pretend they're playing at different golf courses and so forth. Um, We operate 3 facilities right now. We're a young new company. We have a 4th site in development. We're in Tulsa, Oklahoma. We're in Lubbock, Texas, Baton Rouge, Louisiana. Site 4 is going into Auburn University in Alabama. And there's word that there could be a 5th site going into Birmingham, Alabama. Concurrent to that, I am personally overseeing the launch of high-end indoor, kind of what I would call nightclub-ish simulator lounges, where it's all done indoor, high-end dining, very central urban locations where perhaps 2/3 or more of the public could actually walk from their condos or their office buildings. Fingers crossed, first one's going to be in downtown St. Petersburg. We have a local team working with us there.
That's okay.
I have some slides I can push you through here. Proven concept. Topgolf did it for us. We offer in both companies, we offer 2 forms of investment. We offer a common stock, which is a conservative valuation on the company for value-minded investors, typically the more accredited kind of investor. And we also offer preferred stock that pay dividends. So you have your choice in both of our companies. Do you want value growth only, or do you want maybe perhaps a more moderate value growth with preferred first money out along with dividends? We offer both. Management team, I'm chairman CEO. The 3 people I have working with us, actually starting from the bottom, Ryan Koenig, a very dear friend of now almost 15 years. We were in the home building business together. Ryan and I co-formed GolfSuites about 5 years ago. He's the chief development officer, major shareholder, and is in charge of all of our land acquisition, development, construction. Ann England, human resources and marketing, 25 years at the Cracker Barrel restaurant chain, at her peak overseeing 70,000 employees in 650 locations. And then Scott McCurry, the president equivalent. We call him chief operating officer now. He's very close to moving into the president position. Scott, a food and beverage guru from a chain of restaurants called Macaroni Grill, which he worked and ran for 18 years. He then went over to Topgolf and opened something like 30 to 35 of their locations. So he really is the golf driving range entertainment guru of the company. This team works very close together, very tight, and they're just doing a great job. Our locations are profitable. We have a tremendous amount of repeat investment, and for those of you RAD Diversified people, you should know that here in our company, we have a tremendous amount of cross-investing. We have people, a guy just came in today, I was on the phone with, just putting half money in each of our 2 companies. So we have a little bit of diversity, not as much as you have with RAD Diversified, which I'll address later. But the key thing, and I'm going to elaborate on this a little later, I try to focus investors in my private webinars that we do for our shareholders to focus first on economic issues. Economics very different from financial. Economics is really a definition of human behavior. Where do they want to spend money? What do they want to do? 2 key variables in the world of economics. You always remember this from college, first economics college course. Supply and demand. You want to be investing in fixed supply or diminishing supply assets, and you want to be investing in those same assets that have surging, at least stable or surging demand. I'm going to address that in the RAD Diversified area because I think they're doing an excellent job, which is one of the reasons I'm here, in residential, in multifamily, in their agricultural programs. The second thing is risk reward. You know, you have to balance your risk tolerance against your desire for reward. Sometimes that has a lot to do with your age. A 35-year-old investor may look at that different than a 65-year-old investor. That's why we offer preferred dividend stocks as well as common stocks. This golf product that we are doing today, there are under 100 of these facilities nationwide, including Topgolf's 70. There's 3 or 4 smaller competitors like us. We think we will be in second place here within months. This is a product that could go into 500 or 600 cities nationwide. It is just so underdeveloped. In all of our facilities, Thursday nights, Friday nights, all weekend long, we're jammed, 2 and 3 hour waits. It's just a very underserved product here. So again, in your general investing, and certainly in investing with us, you're coming into a very low supply, high demand product. I'm going to move this along. Little prototype shot that we're doing an express product. We're not doing $30-35 million facilities like Topgolf does. We're doing $7-8-9 million facilities. I want to take my shareholder capital and spread it out to a greater number of locations. That's a nice shot of it there. And there is our contact data. I think you folks can link on these links right here to contact us, call the 800 line. So enough on GolfSuites. Let's talk about ERC communities. This is apples and oranges. This is Jekyll and Hyde. This is about as opposite as you can be. GolfSuites, a very fun, very a very colorful kind of experience. Very dynamic, very high labor. ERC communities is a little more conservative. Frankly, folks, a little more on the boring side. It's collection of rent in affordable housing. We're doing in a very unique way, borrowing a little bit from my past. My principal careers have been practicing as a California licensed CPA, and then I went into what we used to call the mobile home park business. Now it's called the manufactured home community business, and I built up a chain of properties to 26,000 rental units across 17 states. Did a big sale a couple decades ago, and I'm still a minority owner in a handful of these properties. But I'm borrowing from this experience, going into this new BFR build for rent arena with manufactured homes. And we are undercutting rent roughly 25 to 30% on a square foot basis, on a per square foot basis, when comparing to traditional multifamily and conventional built homes to rent. We're paying a 10% annual dividend on this for your preferred stock, conservative side. We're offering the same common stock offering if you want a lower valuation, kind of a higher value play. There's the bullets there on what we're doing. I don't think I have to tell this crowd much about what's happening in housing. This housing situation in any of the growth areas of the country is just getting crazy. Pasco County, which is where we're developing our first couple hundred units of this, has told us that they have 1,000 rental applications they would give us from people that just can't find housing and they're trying to move here to take jobs. So it's just an amazing demand going on right now. We're seeing that in other opportunities around the country. I'm going to flip through some of this. I've covered it pretty well. You'll see us primarily develop in the Southeast. We think that that's good affordability. We think that's good population growth, good right to work, strong economic indicators there. And this offering here, for what it's worth, does have a live Reg A that's shutting down this weekend. And it's the last dividend offering we're going to offer under Reg A for non-accredited investors. So I want you taking a look at that if you have interest. Little shot of the leadership team, Ryan and me. But you can see all of this data on site at our websites, and here you have the a little picture of us, a little bit of repeat there. But there's your contact data there. My apologies for rushing through this as quick as I have, but I want to take time now. I want to take a time out to talk to my shareholders, those of you who are existing shareholders or prospective shareholders in ERC communities and GolfSuites. It is a rare occurrence that a sponsor like myself gets together with a sponsor like Dutch here to collaborate, to actually tell my shareholders, consider investing, in fact, do invest in products being offered here by RAD Diversified. This company here that Amy Vaughn and Dutch Mendenhall have put together, a much different concept than what we are doing. We are my two companies are very narrow and deep. We're going deep into the golf entertainment business. We're deep in rental housing, and that's it. That's what we're going to do. We actually receive investment opportunities that we typically just discard, but we now have a home we're going to throw them to. I'll probably throw them over to Dutch and let him be a judge if it's something that he wants to do. But my analysis of RAD Diversified is that they're following the exact attributes I just listed in economic considerations. They're in high demand, low supply asset groupings, single family residential, multifamily in very, very tight areas around the country, California, Philadelphia, areas of Texas. They're in farmland now. The buzzword out on farmland, on agricultural land, is just amazing, particularly with all the foreign acquisitions going on, the ability to literally feed our country and perhaps even get into agricultural exports to help our disastrous trade balance is just it's a very socially responsible venue that Dutch and Amy have gone after here. So I'm really imploring those of you who are our shareholders, take a good hard look at the RAD diversified offerings. I honestly think, I've never said this to Dutch, but in my personal opinion, he's he's putting together what could end up looking like kind of a mutual fund of alternative investing. He's a well-renowned author. Wrote Money Shackles. He's founding the AIA, the Alternative Investment Association, which both our companies are going to be, I think, charter members of and very supportive of. This crowdfunding, alternative investing, Reg A, Reg D factor is really increasing in size. And I think that I want all of my ERC and GolfSuites investors, shareholders to take a good hard look at everything RAD has. So I'll turn it over to you, Dutch.
Well, thank you, Jerry. I mean, there was, a quick, powerful, message when it came to ERC, when it came to GolfSuites, right? You got to give me the clicker, otherwise, I don't know what to do with myself. But what I actually thought was GolfSuites could be like in 4 or 5 different, like you have 400 or 500 cities, but I think in major cities like Tampa, Miami, New York City, Chicago, Houston, Philadelphia, right? Major cities, LA, right? San Diego, San Francisco, like some of those cities you could have 2 or 3
Oh, sure.
communities, and so instead of 500 you could have 1,500 to 2,000, right, across the nation. So I think there's a drastic need, and I've been a person who's been a client, right, of golfing, right,
Sure.
and I'm a terrible golfer, and
So
yet
am I.
I still find the hobby. I think as you get older, we find sports that injure us less, as we go through life and stuff. So thank you for your sharing. I implore my investors and my clients to kind of dive in and go through the journey, right, when it comes to GolfSuites and ERC communities. I think it's gives a good chance for you guys to look at different offerings, and it's always been one of the reasons I wrote Money Shackles, was to give people an ability, right, to have a book that allowed you to kind of digest information when it came to alternative investments. How do you differentiate between Jerry and another company, right? But how do you know when someone is a Reg A company versus just a company off the streets trying to bring in money and build a business? What is the difference between the two? And so that's really where RAD Diversified, where we all started, was in an education. I was doing real estate education around America. We would do these buy trips out to auctions, to houses, tax auctions, foreclosure auctions, and we would do these buy trips around the nation. And we take our students, and they would be like, "Man, this is great information. You're showing us how to analyze deals. You're showing us how to break them down. You're taking us to find good deals and properties." But I only saw like a 1% success rate. And so I got to a point where, from an education standpoint, we had to put our money where our mouth is. And our students, they kept saying to Dutch, if you would just co-invest with us, if you would just invest with us, right, we would invest with you, and we feel like we could go and be successful. And so that's when we first started crowdfunding, first started allowing investors to come in and join us. And I've always been someone that believes access to information is one of the most critical things in the world. So who we are, we're educators first. Both real estate education, financial education, alternative investing education, information. And so I'll give you guys a chance to be able to get our book, Money Shackles, for free. It's a best-selling book on alternative investments. I think it is really kick-ass, and there's also a companion that goes with that, and workbook with your own relationship with money and stuff. And so, our team at RAD really works their butts off to make an impact. We did a company-wide call today, and the whole conversation was about impact. We're here to make an impact on America. We're in here to make an impact on each individual investor, and it goes from education to investing. And some people teach and they don't do, and some people do and they don't teach. But here at RAD, we teach and we do, and we back it up with facts and proof. You see my incredible business partner, Amy Vaughn, one of the most powerful, strongest women I've ever met in my entire life. Her and my wife Vanessa have been colleagues and friends for a long time, and as we grew and built our business together, I couldn't think of someone more powerful and unique, as she's built so many companies and so many businesses over the years. We're really blessed. So all about Money Shackles. Just give you a couple side notes as you guys grab this book, but whether it's page 16 where he says stop trying to earn your way into wealth. There's an easier way for you to follow with our freedom charts. We have these charts that kind of walk you through step by step on how to separate yourself when it comes to financially, but then due diligence. How do you look at a company like Jerry and like RAD and figure out, are these real? Are they legitimate? Are they full of shit? What is a Bernie Madoff versus a Dutch Mendenhall or a Jerry Ellenberg, right? How did he go wrong? What was he built on? Well, he was a private company, right? He didn't have public reporting the way we did. And then on top of that, right, he didn't have a real tangible asset, right? Something you could literally go to yourself and take a look and have a real look at. And so we go through these due diligence. We talk about 6 critical questions you must ask when you're doing these due diligence. Aton Butler is a friend of ours that, you know, is one of the founding members of Broker Dealers in America who read the book, right? It's just a chance for you guys to pick it up. And so, you know, get your free copy. There's the QR code on each page here, right? Or whether or not it's actually, I'll tell you a funny story. One of our investors, Alberto Rodriguez, who's invested with us for years and years as an inner circle member and doing his own real estate deals and been there as getting education and information with us over the years. When he did his due diligence on us as a company, he actually came to our offices and he knocked on our neighbor to our left's office and our neighbor to our right's office and started asking them questions about our company and our business. And yes, that's one form of due diligence, but there's also other forms, right? And as you look at these businesses, you can go to page 29, and whether it's the financial decision tree or it's page 65, with learning about fractionalized ownership, right? One of the things that you're going to get with our investment is you're going to own real estate. You're going to partial owner in real estate, right? Being the largest investor in our companies, right? That's critical to me. There's things I could never do by myself that together we've been able to do in so many different powerful ways. And so as I jump through Money Shackles, right, you can use that QR code, but let's get to our investment. Let's talk about what RAD Diversified has done over the last 4 years. We went from $10 a share to $24.08 a share. It's 140% return over 14 quarters. We have 2 liquidations of events a year where you can liquidate up to 25% of your stock. It has been SEC qualified. It is third-party audited. Every single property has a third-party evaluation. And what that means is every single one of our assets, someone that's outside of our company that's a licensed professional does the evaluation. Typically, they're an appraiser, and they tell us what is the asset worth. And so when you look at our stock price, it's based on net asset value. Being a non-traded public REIT is critical because what happens when 4 billionaires are idiots and take a submarine down to the Titanic without all the safety precautions in the world, right? The stock market goes up and down like a yo-yo. When Russia and Ukraine are going at it, and then Russia gets invaded, and for the first time in the history of Russia, we see things changing and shifting, and these things are happening in America. The stock market goes up and down. When the Fed raises interest rates, the stock market goes up and down, right? Well, our stock price is based on net asset value. That's the value of our properties, the value of our assets. And so over the years, we've created a 140% return, right, in stock price increase for our investors. That's 30% for 3 consecutive years. Now, people always ask me, well, what's the future going to look like? Well, what I'll tell you, and what any real founder would tell you, is I can't tell you what the future is going to be because I don't know what inflation is going to be. I don't know what the cost of materials is going to be. I don't know how much properties are going to go up in the future. But what I will tell you is we're going to do stuff right. We're going to buy in the right locations. We're going to buy under market, off market properties. We're going to buy value add real estate and value add properties. And for us, as long as we continue to buy right, over the years, it's shown that our investors have done extremely well. And that's what's important, because past performance is not indicative of a future performance, but it can tell you who we are and what our DNA is. Well, who are we? Well, a lot of people will say how cool and how famous they are, or Fox News or whatever else, right? Well, for me, these are 3 important charities. A percentage of all proceeds, all funds, right, that RAD Diversified makes goes to these 3 charities. One is Special Operations Wounded Warriors. Another one is Task Force Dagger. Another one is Joshua House. I always say if you don't love America and you don't love our warriors and soldiers here in our country, it doesn't mean you have to love our government. But if you don't love this country and you don't love our warriors and soldiers who fought for each and every one of us to have freedom, go invest somewhere else. Do not invest with us. That's clear to the DNA of who I am. I'm blessed to have had an older brother who spent 33 years in government service between the Army and also as a special contractor, special employee doing missions for our government. And I have freedom because of that. As I grew up as a kid, I was told every day by my father, you better do right, you better be successful, you better go out and do things right because your brother's giving you freedom. And so that's something I truly believe in. And so our two military charities really kick ass. And if you follow our socials, you know we support them and are closing in. I'm hoping this year before the end of the year we've given them 7 figures
Wow.
as a donation to those charities. So I really believe in it. And then Joshua House, that's something near and dear to my business partner Amy and I. We're both adoptive parents, children that have been abused, neglected, children that have not been taken care of the way they're supposed to, right? That is important to me, that we help them and we have their backs. And we have girls that are been a part of Joshua House that we provided them with all the clothing, the school supplies, everything they need to go and be healthy and be able to improve their lives and grow their lives. So it's truly important to us. And so, you know, why are we experts at this? Well, here's what I'm going to tell you is we're what we call true operators, which is something you'll learn about in Money Shackles. What a true operator is, someone who takes their hands and puts them into the soil, not someone who drives by a farm and says, hey, I own that. No, we're someone who truly owns our real estate, whether it's our residential properties and the real estate we're doing every single day. In our residential business, we have 14 acquisition team members that are literally kicking ass in Southern California, Houston, Texas, and the greater area, Philadelphia, Pennsylvania, Tampa, Florida, right, all the way to Orlando. And so Florida, Texas, Pennsylvania, and California are 4 areas where we've made our investments in our residential portfolio. And every single day we're buying anywhere from 40 to 50 homes a month. And every single day they're out there making sure they're buying off-market, non-market, value-add, great real estate, true operators, and that's how we've been able to achieve fantastic returns. Now, on the other side of our business, we have our farms. And I started investing in farmland because I have strong beliefs in our agriculture here in America. I have strong belief that synthetic lab meat is not something true red-blooded Americans should be eating. I also think that if Americans don't realize what GMOs and what hormones did to the American health system and obesity, then they're not paying attention. And I also said to myself, at the end of the day, people need to eat and people need a place to sleep. And when hyperinflation is hitting, the price of crops, the price of farm commodities has been going up, which has created a great multiple of return for our investors. And so our Weezer, Idaho farm started at 454 acres. Now we're up over 2,800 acres of farmland. Our total purchase of it was $8 million. Within 6 months, we sold off 160 acres for $1.2 million and made a $550,000 pretty immediate profit from part of our farmland. Our December 2022 appraisal of our farmland was $24.5 million. Now, our investors, you know, reap those rewards, they reap those returns. I think a part of the future of our farmland will be us having our own butcher shops. A part of our future of our farmland will be us having our own cattle auction that we've become an investor into. And so these are things that are a part of our business. This farm itself, as winter wheat, is a big part of the farm. Corn, sorghum are all things that we're growing. And we've been able, through adding of pivots and adding other farm techniques and reclaiming soil, been able to farm more acres on this farm than in the entire history of the farm in the last 100 years, which is pretty cool. Now, properties. Here's a property that was an HOA foreclosure that we bought. I know $25,000 seems like a crazy, insane purchase price, but all of our purchases are on record, are factual, are on our balance sheets and everything else. Actually, one of our students, we used to teach HOA foreclosures. One of our students went out and bought this HOA foreclosure, got himself into trouble because you have to deal with the banks and other things. So we came in, rescued him. We went ahead and purchased this for $25,000, then took a loan out for $205,000. So we had a pretty amazing return. It rents today for $2,400 a month. The property itself, $375,000. March 31st, 2023 is what it appraised at. Pretty amazing. Bradenton, Florida, another one of our properties. We purchased this one for cash. We had to do a quick closing, which is some things as an individual investor you can't move like that, but as a fund together, collaborative, right? We can move. We can move with the speed of lightning. And so we bought this 271.5 cash appraisal. March 31st, 2023, $405,000. Currently rented $2,300. Oh, potential rent $2,300 a month. Baytown, Texas. Bought this property for $180,000. Right now, not every property has these crazy, insane returns. Right, some properties have higher returns than other properties, but we're constantly buying. And this is a very common type of deal here. Almond Street, $180,000 purchase. We took out a loan, $146, which means we were what? 34,000, right, cash out of pocket into this property. Property's worth 227,000, so we put 34,000 cash into it. There's about 47,000 in equity into it, and so you can see how our returns have been what they've been over the years and how we've been able to stack this stair step. And sometimes people say, well, Dutch, it seems almost too good to be true, the invest returns that you guys have made. And what I say to them is, they'll say, like, how do other REITs not make these kind of returns? How does the REITs in the stock market not make these kind of returns? I think one is that we're big enough where we have a real competitive advantage over the individual, but we're also still small enough where we're not trying to make tens of billions of dollars where they don't know what to do with their money. I also think they should just be better at real estate. At the end of the day, is one of my true beliefs is that if they knew what they were doing and they truly made their investors first and then they maximize returns versus putting money into their own pockets, they can make these kind of returns for their investors
Well,
too.
they're capital driven too.
Yeah.
There's so much capital forces the expensive buy.
Yeah. For me, I feel like we could be into the billions before we would have to change our model on how we're doing our residential real estate. But, total portfolios between RAD Diversified REIT, RAD Inner Circle, the RAD, and all of our different vehicles, is a $200 million portfolio. And we've still been able to achieve these great returns, for our investors through each part of this. So if you guys want to give a call to one of our team, it's the 813-367. Some of our team is available now to chat with you, whether it's IRAs, 401ks, no matter what vehicle you're utilizing. You can make that phone call, 813-367-1237. For those that are on audio, not visual, I'll say it again, 813-367-1237, and you can just call and talk to our team. There's no pressure. There's no like, hey, you got to do this. It's, hey, here's information. We're going to provide you with all the knowledge. Take your time, right? Do your due diligence. Make a good, healthy decision for you and your family. We'll be there with you, right? And our team will walk you through the process step by step. And the interesting part, the last part I'm going to share, is our other offering, which is RAD America. And RAD America is about farmland and it's about development. And what's amazing about this isn't Dutch's idea or something I came up with. It's kind of been the demand of our investors. When we first started our first fund, it was the demand of our investors. When we started Inner Circle, it was our demand of our investors. When we started our Opportunity Zone Fund, a couple of our bigger investors had sold part of their businesses and companies and said, Dutch, either start an Opportunity Zone for us or we will go give the money to someone else. And so we started an Opportunity Zone. So RAD America is our offering that is all about farmland. And I believe it's one of the great assets. I think a few years ago, we started pushing that foreign countries, especially enemies of the United States, should not be allowed to buy land here in America. And now we've seen laws in Iowa and Arkansas and other parts of the country that have passed that are protecting American farmland. And for us, let's own it together. And let's maximize the return on it. And so for us, it's about a long-term play with American and farmland. But the long-term play is amazing because when you talk about farmland that we've bought at $3,000 an acre and that's gone all the way to $10,000 an acre, we believe the same is true for the properties in RAD America and the potential future for it. Now, everything when you talk about future is always a guess, right? And what the potential is. But I don't think there's going to be any more land in America today than there is 10 years from now. I think it's going to continue to get more and more scarce. There's going to continue to be less and less of it. We've all heard location, location, location our whole life, but we've also heard there's only so much land in the world. And I think finally we've hit kind of a tipping point with American farmland. I also think that there are billionaires that are taking farmland out of existing operations so that they can try and control the food supply when it comes to synthetic lab meat and those kind of things. And so for us, we're going to have the best cattle, we're going to have the best crops, we're going to have the best soil, we're going to have the best irrigation, really, making it a big difference. And this prosperity is huge, right? It offers us a lot of diversification. Even in one individual farm, when you talk about cattle, you talk about wheat, you talk about sorghum, you talk about corn, or you talk about like our Tennessee farm, we cut $750,000 worth of timber off of this property within the first 90 days of purchasing the property. And so, that's, it doesn't actually say the purchase price on this property, but I believe we bought it for 3.2 million. If I get that number wrong, I apologize. We'll make sure we have that out there. But the 750,000 that we took off the plate right away not only massively reduces your purchase price, but it creates a great return on investment. And then we planted wheat on the property immediately afterwards. If you're on our socials, you can see we do pictures commonly of what's going on the farms and what's happening on a regular rotation, right? Soybeans, our corn rotations, all of this is a part of how these farms are growing. And so, all of this is about preserving our land, preserving our country. I believe in farmland, but I want to get through this quick, let you guys ask questions. The 813-367-1237, or you can click on any one of the 3 QR codes, whether it's to get our free book with Money Shackles. If you want to talk to someone about RAD Diversified or RAD America, you are more than welcome to. I think those are the coolest QR codes I've ever seen in my life. Our team did a great job graphically with that. What a modern world we live in. But we'll open it up to questions, and it's pretty cool. So I see a bunch in here. On here, I mean, Jerry, do you have any questions? I mean, I got one or two for you, but
just again, commenting to the GolfSuites and ERC investors. At our two companies, we're basically housing people and we're entertaining people. Both probably meaningful elements. In Dutch and Amy's company here at RAD, they're housing people and they're feeding people. And we're essentially feeding them at GolfSuites, but it's really entertainment type of dining, and it's more drinking than it is eating. So this is critical.
Well, the more they drink, the more they're going to eat.
Yeah, right.
That's for sure. That's
true.
part of life.
This food supply, foreign investment in farmland, you really think this kind of stuff through when you now know that China is building military bases in Cuba. Interesting for those of us in Florida, huh, Dutch? I mean, we're in striking distance. It is both fundamental to the food chain for Americans, but I also think it's a potential export. Dutch, I mean, you could get this thing up to a couple 100,000 acres at some point. You'd be exporting, and we have a terrible trade deficit in this country. Our agricultural trade deficit is terrible, and Dutch structures the finances of this farmland, I think, in a very minimal risk basis, so that it's not over leveraged. There's no risk of loss. And I think the last thing I would say to my people, the GolfSuites and ERC people, is remember that with our company, you're in a portfolio build, and then we want you to continue to invest with us. We'd love some of Dutch's investors to invest with us, but it is portfolio build. It's very long term. It probably goes into some kind of REIT conversion or public merger of some kind in these two companies as the years go by. In RAD Diversified, you have combination now. You have portfolio build. You also sell assets.
It's also rare for people to be able to access capital.
Yeah,
right?
and you're doing periodic cash out opportunities. So you have you frankly have what I would classify as more of a liquid. There's more of a liquidity factor over here at Dutch's company, and I think it needs to be looked at. And when you look at asset allocation, you want to invest your capital in different companies like ours, and then look at how they're asset allocating. So I think the allocation procedures here at RAD are just remarkable. I just can't endorse it more. I just wanted to punch that hard on my people who've joined us here today.
Yeah, I mean, I think those are great points. I mean, for me, what kind of blew my mind is we took the refinance of our Weiser, Idaho farm and actually were able to purchase, because it made such great profits, the Searles farm.
Right.
Without actually bringing in new investor capital, we were able to purchase a second farm and grow from 454 to 2,700 acres, now 7,500 acres.
That's amazing.
And, 7,500 acres is an impact. 750,000 acres would be even a bigger impact.
Yeah.
And I mean, that's one of those BHE goals. What I love about GolfSuites in some different ways when I analyze it is there's no limit to the growth potential of a business, right? And in individual real estate, like though RAD Diversified's returns have been great, but there is a limit to the kind of return that they're going to make over the years, right? We're not going to ever have 1,000% return. There's never going to be a 10x or 100x multiple, right, when it comes to RAD Diversified, and neither with ERC communities, neither with RAD America, right? They'll make returns, the real estate return,
far more stable.
Yeah,
more stable.
But then with GolfSuites, you have that ability for the potential 10x, the potential massive return down the road, when you get to a point where the company sells or you get to the point with a merger,
Right.
be great. Top Golf wants to come and buy you out as long as they bring enough money. I'm sure you'd be happy, right, for your investors to make that kind of capital. But maybe I think that's down the road, or maybe you don't want to sell to Top Golf. I mean, what are your thoughts when someone asks you that question? I bet you get asked that question all the time.
Well, American investors are very exit minded. I mean, that we tease about this. A lot of American investors want their capital out before they even make the investment. So we're talking exit all the time. And I feel that the exit here, it's a monetization event of some kind, cash sale to any form of company. Um, Private merger to a private company, merger to a public company, or our self IPO. In the case of GolfSuites, I tell my people over and over, our best uh, platform projecting forward is probably a public merger. Who is it? Maybe it's TaylorMade, maybe it's Cleveland Golf, maybe it's Titleist, maybe it's Brunswick, maybe it's Revlon. The Revlon makeup company owns the Mastercraft boat company, and Coleman Lantern, Coleman camp goods business. So these highly diversified businesses, there's tons of them. Berkshire Hathaway as well. So and of course, being a CPA, I'm always into tax advantages. And as you know, Dutch, you exchange public shares; they're tax deferred. And if you get up older in age, you get step up in basis and all of this tax stuff that I can haul you through the weeds on. But my guess is that GolfSuites at a somewhere north of 50, 60 locations with a nice hurdle going up a growth curve is where that's ripe. Now, ERC communities, different.
Now, with GolfSuites, how much is it per unit, like to build, one
Right
facility?
now, we're staying I'm going to go wide, and
Hmm.
I'm going to stay anywhere between 6 and 10. My Auburn University site,
6 million to
yeah,
10
it
million.
looks like
Okay.
it's coming in at 6 million.
So if we can get to 50, you're about 500 million
Well, yeah, of course,
in
that's
total
cost.
asset,
At
right?
cost, yeah.
And then how much leverage do you use per
Well, right now our
building a
leverage
facility?
is pretty low. I don't
Okay.
like how low it is, but because interest rates have
Yeah.
harmed that, but probably a 60% leverage ratio. That would be refinanceable.
So we need to raise over the next few years. We need to raise $250 million.
That's
Okay.
probably what that is. And of course, you have organic growth. We have been a dividend company, as you know. Those dividends are the percentage of profits that go to dividends is going to be lowering now as we de-emphasize dividends. They're going to be available, but we're going to be de-emphasizing them. And so you have internal organic growth. We're very efficient on overhead, extremely efficient on overhead, and so we're not big spenders. Our corporate office, our headquarter office, is at our Lubbock facility, so it's just free rent. And that won't last forever, but we like those kinds of principles. So between the organic growth you have from profits, heavily tax incentivized, there's very minimal tax here under current law, combined with share growth, share sale growth. Um, you'd have an asset growth curve that goes like that. But I think at any size, Dutch, GolfSuites is in my perfect world is a public merger with a major company. Um, ERC communities, that being more my bailiwick, my personal bailiwick, we could IPO that in a REIT, in a public REIT. We could do a New York Stock Exchange REIT conversion. That probably comes home at about 4,000 or 5,000 rental units, which could happen extremely fast. The difference between the two companies, I was telling somebody this morning. Strict limitations in the golf company at 7, 8, 9 million, whereas ERC, real estate, you could do an $8 million development, you could do a $40 million. The fundamentals are it's this one general contractor, it's one supplier of homes, it's one piece of land. So you have tremendous flexibility on the real estate side with ERC. I'm thinking that we could take that public ourselves. And the shareholders, of course, can register shares, take out cash, let it all ride, do whatever they wish with
Like,
it.
one of the things I've felt with our different real estate vehicles, right, is when we're ready, is I feel like if we rolled them up together and bundled them together and then did an IPO
Yeah.
out of it, I feel like that could be a massive
Oh yeah.
return for our investors. And but at the same time, there's another part of me is I love what we do right now. So for me, I'm okay with running it the way we run it, and making the returns for our investors we've been making. Let's jump into some of the questions. Somebody says, "What does ERC stand for?" I'll let you answer that one.
That's interesting because my last name is Ellenberg. Everybody thinks that that's what and it may be. Ryan Kenning and I, who I described earlier, formed this company coming off of another one that had the letter letter E involved. R and C stands for residential and commercial. It probably means Ellenberg residential and commercial, but I'm not too sure. We had a home building company here in Tappan. We did a couple hundred homes called ERC Homes, ERC Home Builders. So we just brought that name forward into ERC communities. So I think it means Ellenberg residential and commercial.
I mean, I'd love to say RAD was always redefined American dream, but in the beginning it stood for the three partners.
Well, I was wondering about that. D is
Yeah,
Dutch and
yeah.
A is Amy, and there was an R.
There was the third partner.
Yeah, okay, sure. I wonder.
And it sounded better than DAR, right?
Yeah,
RAD sounded
right.
a lot
Rad
better
is
than
cool.
DAR. So, but I thought RAD was cool. So but then over the years we defined it as the redefined American dream because
Yeah.
I feel like that's what we're helping
Yeah.
people build.
The second question there is ironic because that's how we met.
Mhm.
I mean, self-directed IRA. Is GolfSuites or are GolfSuites and ERC investments
Yeah, our mutual
available?
friend Ramet.
Yeah, right.
introduced
And
us.
self-directed IRA. Well, that's how Dutch and I met through the IRA Club. We do a huge business, and you guys do huge business with them too. We have a ton of IRA 401k business. We have money coming in every week from that, and it's primarily through IRA Club. We link with them directly. Again, if you have our investment link, but we're a great IRA
Why
product.
don't we throw the investment links up on the board behind us, and we can throw their investment links back up on the PowerPoint too. I think that would be great. Couple other questions. It's great. I'm a U.S. Marine vet. Thanks, Tanya, for your service. So much gratitude every single day. We have many veterans that work here at RAD, and we work diligently
Army veteran here.
to support them. Yeah,
Army veteran here. So yeah.
and
Vietnam era.
and not everybody gets to have the life you and I have.
Yeah,
and
exactly.
and so I love honoring that. Farmland is crucial, that's for sure. You guys can go ahead and scroll down, Zach. I'm at the bottom of the questions there. On website ERC Communities, correct?
Yes, erccommunities.com. Yeah.
Go ahead, keep scrolling there, Zach. You guys asked some questions, right? I'm understanding correctly, it is now a minimum of 10K to invest with RAD REIT. So great question. So RAD Diversified REIT, we run what's called a Regulation A offering. We're currently under requalification with our Regulation A offering, and when that happens, multiple times over the years, when we max out the amount of money we're allowed to raise, when our stock price increases by more than 20%, we have to go through another qualification with the Securities and Exchange Commission. And so they monitor companies like ours, very closely.
Yep.
To hold us to a certain standard. And so with our current, we can only currently allow accredited investors to invest in RAD Diversified REIT. And I think we may be as little as 30 days, right? 45 days from allowing non-accredited. So I recommend, even if you're non-accredited, to go ahead and talk to one of our team, get on the wait list, be ready to go. And hopefully we can get that done, before the next stock price change. But I think we have a new stock price change actually coming in the next week, so it'll probably be before the following stock price change that we do. I can never say whether they go up or go down. We've only had one trend in 3.5 years, but
Yeah.
I always have to say that it could go down just as much as it could go up. But I'll tell you, we're buying good real estate and good assets. So the minimum for our Reg D offering, which is another security under the Securities and Exchange Commission, is a minimum of 10K. What is the actual investment opportunity for GolfSuites for both accredited and non-accredited investors? Great question, Martin. How you doing, Martin? I see you sitting there. I know Martin's a big Trump fan, even though I don't see his phone right now. I always see the back of his. I always see the back of his phone on there.
That's good. GolfSuites right now, for the next probably we're coming up on July 1st. Huh? We're similar to RAD. GolfSuites is we're either going to do a CF or an A for non-accreds. That's probably if I do a Reg CF. Which is a very close cousin to a Reg A. Let's not get into those weeds. It's a smaller offering. It'll be ready, say August 1st. If we go ahead and do a Reg A, it'll probably be September 1st. Right now, we're doing accredited only under Reg D because we just
Now with
acquired.
CF, do you have to get qualified, or
No,
is it just
no,
filing the documents?
It's a non-qualified, smaller raise, goes
And
very,
you can bring in non-accredited.
yeah, and
Okay.
and market advertise.
Okay.
So right now the golf company is accredited only for both common shares and preferred dividend. Switching over to ERC Communities, as of next Monday is going to be the same. We have a 1-year Reg A that's expiring on Monday. That'll be the last time non-accrediteds can get dividends. So that's the answer there. that answer that I just gave can take you into the weeds a little bit. So give us a call. You've got, I think
Yeah.
we'll get our 800 line. You might even want to talk to me. I can walk you through that pretty carefully.
Yeah. Do you want to give their 809 up on the PowerPoint for everybody, or even post it in
And
the
the
chat?
links. Yeah.
Yeah. Cool.
They can click the links when they're on, can't they?
Yeah.
Yeah. Okay.
Yeah. And then when we send out the replay, people will be able to
Yeah, sure.
click the links too. There you go. Just go ahead and scroll down to Jeremy.
And by the way, when you go to our links, like ERC community, all of our people work both companies. So when you're talking to Golf Suites, you're talking to ERC communities.
Okay, so I was wondering the same, Martin. Next question is size says not sure why you guys are charging 50K to join Inner Circle, and when you say it is tuition fee or the learning purpose, it's like tax free for you guys. And on the other side, you're saying minimum investment after fish is 15K. Not sure what we benefiting when you are doing everything. So, what size is actually asking out is another one of our products called our Inner Circle,
Right.
which is $50,000 to join. It's a membership, right? That people are able to join from our to be able to joint venture into real estate, into properties. Our investors have made fantastic returns. 100% of them have made money over the years within our inner circle and doing their own real estate deals. We coach them, we mentor them, we find the deals, we operate them. But this is not an inner circle presentation. We have a video we can send you on that so you can go through it. It is not a public security, and tonight we're talking about two great
Yeah.
public securities. But for me, the reason you invest money in anything is in order to make a return, right? And that's the purpose at all times. So let's go ahead and go down to Mark's question. We have to go. Thank you, Jerry Dutch from Las Vegas, Joni and Mark. Awesome hand claps. Thank you guys. Well done. Very impressive. Thank you guys. Is RAD still considered ground floor? I mean, I don't know. I mean, we've been around 4 years. I've been in business, 15 years. I would probably say
You're
no.
going concern.
Yeah,
You're a full definition
I
going
think
concern.
I
My
think
golf company is ERC isn't yet, but Red. Let me answer that. From an audit standpoint, that the RAD companies and the RAD diversified companies are absolute going concerns, at least in my opinion.
cool. I've been a RAD Inner Circle member 18 months across various investments, and I quickly made back my membership fee, so it's all profit from there. Hey, thanks, Paul.
Yeah, can I insert too?
Go
Because
ahead.
I was at the San Diego show and was told about this inner circle. One of the reasons I'm sitting here tonight, and I shared this with all my people. We had Andy Montgomery, we had Louis Pesquine, Lori Monty with me out there 3 or 4 weeks ago, and met just tons of these inner circle investors. And I have to tell you, these are happy people. And that's not a pitch. They're just happy people. They were happy to be there. They loved what one of your investors was out talking to us, Dutch, and a property. They're going through property, and they got up and ran in. They thought they were going to miss out, and we had dinner together that night. They live here, right here in Tampa, and they said they got it they got the opportunity by like 30 seconds. So it's a very happy group of people. And I don't know much about Inner Circle. We don't offer that
Yeah.
in our company, but it seems like you got a nice niche there. Very nice niche.
It's not perfect. I mean, when you invest with people for a decade, right? It is never runs, absolutely perfect. But I tell you what it is we're in the grind together,
Yeah.
right? We're in the rehabs together. We're in
Right.
the property management together. We're in the buying together. We're in the selling together. And I think at the end of the day, like when you combine those efforts, you can always do more together than alone. We're going to scroll down to Jim, Golf Suites. Ah, nice. I'm an investor closing in on 80 years of age. I need safe, quality investments, but waiting period before liquidation is concerned. Is there probably 5-year wait or more? So Jim's just asking on the wait. Good question, Jim. I see you there, Jim, with your hand on your chin.
Oh, Jim, here's what I would say. You would want to come on the preferred stock side, the dividend preferred stock side of our parent company. And in terms of, I can't sit here and say we will sell this in 5 years. In fact, as you know, Reg A, we're bound by Reg A, whether we're doing Reg A or Reg B. We have to adhere to the higher regulation. We're not allowed to project this kind of stuff. But there is, as all of these companies, as Dutch's companies move on, as these two of mine move on, there are of course shareholders out there all the time who want to buy shares. Buy shares from other shareholders. So we could probably accommodate something like that. Something could happen in 5 years, but I'm telling everybody that at this point in time, this is a 5 to 10 year play. And it all is, it's very capital driven, as is your business. The more capital we raise, the faster we grow. And the faster we grow, the closer we get to a monetization or an exit, event. So, but if 5 years is a real lockdown for you, then you're going to have to, you're probably going to have to think twice about
I
this.
mean, Jim, you look like you'll be 105 to me.
It's a good sport.
Yeah,
Good
he
sport.
is. Jim's been around us for a number of years. And yeah, I always enjoy. Is RAD preferred shares as well? Actually, RAD, we don't do preferred shares. We have one stock. Part of that is just I'm a real estate dog. Jerry actually has a lot more life when it comes to managing stock and managing shares and managing investors and those kind of things, right? For me, I just was trying to figure out what's the next way that I can allow investors to invest with us, right? And so I actually only started learning about preferred shares in probably the last 24 months and those kind of things. And for us, preferred shares means you're going to get paid first, right? Well, all our investors have the same rules when it comes to getting paid out. They can take up to 25% of their return, right? 6 months, twice a year, right? Which is pretty cool.
I think your liquidation preference cancels out the need for
Yeah,
preferred.
I do.
It cancels it out. It's every bit as good, if not better. So I think the preferred stock would be superfluous in what you're doing, especially with that cash out option.
And then Neil's asking you a question. And Neil's if I'm correct, Neil, you're a hotel owner yourself. Neil, you are asking about the dividend with Jerry and kind of how they work and stuff.
Yeah, we pay a quarterly dividend with an annual rate of 8%. The golf company 10% ERC, and it's
That's a huge dividend.
Yeah, it is. Yeah, and we have it's interesting you say that because we have a tremendous investor demand now for people who don't want the dividends. They want a higher.
Yeah, they don't want to be taxed too.
Yeah. Well, they're tax deferred.
Yeah.
But frankly, in terms of preferred stock offering a dividend, I get a higher valuation on those shares, but you're paying more for that stock. So now we're offering a cheaper price stock that's common, and it just depends on what you like. And I think a lot of that is age sensitive. A lot of that is very age sensitive. So the dividend in both companies is 4 years old, and it just runs like a clock. So it's paid out quarterly. We use ComputerShare as our transfer agent, and they process all that for us.
Neil, you might have to clarify. I think you're asking Jerry what ROI on a 50K investment would be, which I think we both are not supposed to, based on our Reg A offerings, make.
Well,
those
ROI, I mean, you can tell what the dividend
Yeah.
rate is ROI, we're not supposed to be doing that. And we never know who's watching this. The rules, the Jobs Act,
Pretty strict.
yeah, and our mutual attorney Sarah
Yeah.
Hanks helped write the law. There's very, very strict protections there. Actually, protect management more than anything, and prevents any false, misleading statements that hey, you're going to triple your money in 3 years. And because you and I know sponsors who would do that. They would say that if they were allowed to.
Yeah.
So,
and we also know people that aren't running a public fund the way we are, right?
Right.
Where they would sit there and say, here's what the future returns are, and it's illegal and it happens all the time, but they say it all the time. But they're not a public offering like we are. They haven't been through qualification. They haven't been through all the processes that we have. So it is very different. The next question is, RAD America is a QOZ fund for clients investing their capital gain, and are you also taking non-capital gain investments? So the answer is, RAD America is not a QOZ. We do, within the RAD umbrella, have a QOZ investment opportunity for people to be able to invest in. Now that QOZ invests in the same exact properties that RAD America does. It invests in the same properties that RAD Diversified does. They're in the same territories, the same markets, and so we do have a QOZ fund. Now with RAD America, we are currently taking non-capital or non-cash, and so we actually have an UPREIT that people can invest into with RAD America.
That's
so
amazing.
We can allow them to exchange property for shares and take full advantage of the tax advantages with that. And so that is a pretty cool thing that we have, and it's huge because it's my funnest thing in the world. I said the day I can someone can take a property, exchange that for stock. And now we have a free and clear property within our REIT that we haven't had to pay cash for. I think that's a pretty freaking cool thing.
And they get a tax deferred
gain. Yep. And there's nothing better than tax deferment in the world.
Yeah.
I think it's one of the 10 wonders of the world. If I said
Yeah.
the eighth wonder of the world is compound interest, maybe the 10th one is the ability for us to be able to do those stock exchanges. So, good question. What is QOZ? It's an opportunity zone, qualified opportunity zone, which means anybody who invests in an opportunity zone, if you have a capital gain from, let's say, a sell of stock, or from the sale of property, or from the sale of a business, you could invest in a QOZ and you can defer your capital gains taxes for 5 years. So instead of that taxes making you no money for 5 years, you can defer that, and that money can make a return for you for 5 years before you have to pay the capital gains taxes. And then the original laws were after 10 years, any money you make while it's in the QOZ is non-taxable while it's in the QOZ. Currently that expires in a number of years, but I believe they'll amend and they will initialize that in the future years as we go through. But the big part of the advantage is the deferment of capital gains. My friend asks me to explain the 50K membership thing. I think I say it is like a franchise. One would have to drop more than 50K in most cases than deal advertising staff, and most likely required to actively engage in the business with Inner Circle. It's so much easier. Thank you, Viva. I appreciate that. In the future, will there be an annual meeting event for shareholders? On our end, we do monthly calls for all of our shareholders to do Q&A, to tell you about properties we've purchased, properties we've bought, and that's kind of a cool thing that we do with our investors. How do you guys handle that, Jerry?
We do webinars,
Mhm.
and we do, of course, we do our standard reporting. We've got to remember something. The change in assets in our
It's
company is
slower,
much
yeah.
more gradual. And we announce it. We're
Yeah.
very heavy on announcing, but we don't. You guys are buying assets like every week, every
Mhm.
day. We're doing larger assets that are
There are days I get tired of signing.
yeah, right, right. No, but we know we stay very current. We're doing
I
web.
shouldn't say I never get tired of signing. I get tired from signing.
Yeah, right.
Days.
We're doing weekly webinars now where I'm trying to really, they're like shareholder meetings, not pitches. Shareholder meetings.
Yeah, can you guys put the phone number for the Golf Suites is 888-530-9093. I think it should be up on the screen, but one of the investors is asking, so let's give that number. Jim can give a buzz here. But it looks like we're kind of at the end of the questions, and we're at our time frame, right? We shared for anybody. Jerry, any completing thoughts? Any finishing thoughts as you wrap through this?
Well, I just invite everyone that's on here from RAD to take a look at our two companies. We're very available, and all of you ERC communities and GolfSuites shareholders, take a good hard look at RAD here. There's an awful lot going on here. It's very hard to get it in an hour, but it's a very well thought out business plan. A tremendous family sense of affiliation amongst the investors I saw out in San Diego. I mean, these people really like RAD. They love Dutch and Amy and the Vanessa and Aaron and the whole crew. They look. It's just the thing was just a love in. It was very surprising because Dutch, you go to these things, they can be pretty draggy, pretty boring, and this was very exciting. And so I think it's a great company that you all need to explore.
Well, I see a lot of, our Inner Circle members on here. I see a lot of investors on here. I see some of my team and staff, and I see some brand new faces I've never met before. And just quick hello to Bob and Chrissy, who've been in Investors Inner Circles with us for a long time. Hi, you guys. Chrissy actually used to be an accountant for us years and years ago, and she's been with us for a long time. But guys, I think the great part is I don't trust anybody. Right at the end of the day, like when it comes to investments, my own mother-in-law, I mean, back in the day, brought me these tax investors and different things, and it was right at the beginning. And I said, these people don't know what they're doing with tax leads and tax deeds. Why are you even looking at it? We invest in real estate every single day, and she was our first investor, right, and very beginning with us, and she's won so much, and I love that for investors as a part of our community and our tribe. So hey, join us. I think Jerry and I are going to continue. Somebody asked, is there going to be a joint venture in the future? I said, you never know what the future holds, but I don't like.
We certainly hope so.
I don't like doing partnerships. It's very difficult to find an incredible partner. It took me a long time to find Amy, and over the years I've bought out other partners. But here's what I tell you about what I know about ERC communities and Golf Suites. because I feel like it's a great product from what I can tell. I think Jerry, as a person, as we've been doing business together and collaborating on different things, I think he's been right with integrity and with action every step of the way. I think that's pretty unique and special and rare to find when so many businesses are purely based on greed and not impact. So, with that said, God bless everybody. Have a great night. We'll share the links one more time in the chat, and we'll talk to you all soon.
Thanks so much, folks.